Let me tell a quick introduction of these both companies. Bumi Armada Berhad is an oilfield service company which provides marine transportation, engineering and maintenance service to the offshore oil and gas industries. It is based in Kuala Lumpur, Malaysia and has operation in 7 countries. Bumi Armada was incorporated in 1995. Baraka Offshore involved in providing and carrying out onshore and offshore contracting works, commissioning, pipeline installation, fabrication, hookup, topside maintenance, and other related activities. Baraka was founded in year 2022 at Petaling Jaya.
Next is ratio analysis. The first one, profitability ratio, is gross margin. A higher gross profit margin typically indicates that the company is more efficient in controlling its direct costs or has more pricing power in the market. In this equation, shows that the Bumi Armada has the highest margin compared to Baraka Offshore. So Bumi Armada is efficient in controlling its direct costs or has a pricing power in market. Second one is net profit margin. A higher net profit margin indicates that the company is more efficient in converting revenue into actual profit. It reflects the company's ability to control costs and generate profit from its operation. So in this case, for 2021 and 2022, Baraka Offshore shows that the company is more efficient in converting revenue into actual profit. One, for profitability ratio is return on equity. A higher return on equity generally indicates that the company is more efficient in generating profit from the money invested by its shareholders. For 2021 and 2022 shows that the Bumi Armada is utilizing well the equity capital provided by its shareholders to generate profit. While 2023, Baraka Offshore shows that the company is utilizing well the equity capital provided by its shareholders to generate profit. Second one is for ratio analysis is liquidity ratio. First one is current ratio. A higher current ratio generally indicates that the company has sufficient current assets to cover its short-term obligations, suggesting better liquidity and lower risk of default. In 2021, Bumi Armada has the highest current ratio, while in 2022 and 2023, Baraka Offshore has higher current ratio. Next, for quick ratio. A higher quick ratio indicates that the company has sufficient liquid asset to cover its current liabilities. So the company has better liquidity means that it has a lower risk of default on short-term obligation. In this case, shows that in 2021, Bumi Armada has the highest quick ratio, while in 2022 and 2023, Baraka Offshore has higher quick ratio.
Next is net working capital. An increasing trend of Bumi Armada indicate improving liquidity, while a decreasing trend of Baraka Offshore could signal potential liquidity problems or inefficient working capital management. It indicates that Bumi Armada has more sufficient current assets to cover its current liabilities compared to Baraka Offshore. Next is debt ratio. An increasing trend of Baraka Offshore indicate that it has significant amount of debt, while a decreasing trend of Bumi Armada indicate that it has lower proportion of debt to its relative assets. It shows that Bumi Armada has low financial risk compared to Baraka Offshore. Next is debt equity ratio. A high debt to equity ratio of Bumi Armada indicates it is highly leveraged and has a significant amount of debt compared to its equity. On the other hand, a low debt to equity ratio of Baraka Offshore suggests that it has a lower level of debt relative to its equity. So it shows that Bumi Armada has a higher level of financial risk and leverage than Baraka Offshore. Lastly, equity ratio. A high equity ratio of Bumi Armada indicates a lower level of leverage, while a low equity ratio of Baraka Offshore indicates a higher level of leverage. So it shows that Bumi Armada has a lower level of financial leverage and risk than Baraka Offshore.
In this slide, we will analyze whether Bumi Armada and Baraka Offshore fulfill the requirements stated in the MFRS 8, which is operating segmental. The objective of MFRS 8 is to help users of financial statements to understand the performance of an entity. Firstly, both companies appropriately measured their operating segments. Secondly, Bumi Armada provided complete general information while Baraka's Offshore general information is incomplete. On the other hand, Bumi Armada accurately segmented their profit or loss, which included in the reported segment of profit or loss, asset and liabilities, whereas Baraka Offshore didn't segment it correctly. Moreover, Bumi Armada precisely reconciled the total segment of revenue, reported segment of profit or loss, assets, liabilities and material segment items. But Baraka Offshore reconciliation is not accurate. In a nutshell, financial statement users are able to have a clear understanding of Bumi Armada's performance compared with Baraka Offshore.
MFRS 121 the effect of the changes in foreign exchange rates, which set out the exchange rate that an entity uses when it reports foreign currency transaction in the functional currency or translate the result of a foreign operation in a different currency. From the analysis of both companies, we can see that both companies will measure foreign currency exchange. Furthermore, both companies are also recognize the exchange difference in a statement profit or loss. While for the reconciliation of total segment revenue reported segment profit or loss, Bumi Armada have used it while Baraka Offshore didn't mention it.
Next, for MFRS 124 related party disclosure, this standards mandates that relationship between a parent company and its subsidiary must be disclosed, regardless of whether there is a transaction have been occurred between them. Additionally, it requires disclosure of transaction with post-employment benefit plans and mandates that this disclosure is specified in paragraph 18, which is being made separately. This purpose of MFRS 124 is to ensure that the financial statement contains the necessary transparency regarding relationship and transaction that might influence the financial decision of users. Both companies are required to disclose their relationship with subsidiary and any transaction with post-employment benefit plans. However, the disclosure might differ in detail and complexity due to the distinct nature of their corporation and corporate structures. For Bumi Armada, with its extensive marine transportation and offshore engineering services, and Baraka Offshore focus on contracting and pipeline service, may have varying number and types of related party transaction. These differences underscore the importance of MFRS 124 in providing transparency to stakeholders about potential conflicts of interest and the financial impact of intra-group transaction.
In conclusion, from the financial analysis of Bumi Armada and Baraka Offshore, we would know that Bumi Armada is running more efficiently compared to the Baraka Offshore. The inefficiency result of Baraka Offshore clearly shows that the company carried out more fraud compared to Bumi Armada. The potential fraudulence that carried out by Baraka Offshore is inappropriate accounting of joint venture. It is inappropriate to control items with jointly controlled items and by those who believe that ventures have significant influence rather than joint control in a joint control entity. Secondly, increased liabilities. When liabilities are overstated, it will result in an inflated amount of expenses and obligation to investors of stockholders. Third, high debt to equity. The higher the ratio, the more difficult it will be for the owners to raise capital by increasing long-term debt, and the greater the risk assumed by creditors. Last but not least, weak internal control, which may also lead to fraud. This might be due to the override of existing internal controls or lack of management review. Thank you.